Now, most people, when they think about buying stocks, immediately start thinking about brokerage houses or full-service brokers or stockbrokers, right? You think, oh, I buy stock from a stockbroker. And that's really a full-service broker is. They're stockbrokers, and they offer more than just simple buying and selling. They offer advice as well, too. So they buy and sell stocks for you. They give you advice. They might call you up with a hot stock tip or something that they're recommending, or send you information or emails, or give you information to around research, or give you access to research, or they have access to tremendous amounts of research, and that's part of the advantage that they promote and say, hey, yeah, you might pay a little bit more for us, maybe a lot more for them, but the idea is you're going to get some stocks and recommendations that are very, very well researched. They basically can be set up to manage your portfolio on your behalf. You can decide how much authority you want to give them, but if you want to be completely hands off, maybe you'll have a conversation about like the types of stocks you have or how much risk you want, but you could say, you manage my portfolio for me. And that's how traditionally it was done, right? You'd hire a stockbroker and they would go and buy, sell stocks for you in your portfolio. Well, nowadays, people have a lot more access to information through the internet, through discount brokerages and online brokerages, and they want to be more hands-on with their investments. They want to be more of a do-it-yourself investor. So the use of full-service brokerages certainly have gone down over time, but still a lot of people use full-service stockbrokers, hoping to get better returns because of that expertise that the full-service broker will provide you. Now, some keys around this is one, trust. Your trust is not, you're dealing with a big, large brokerage house, maybe, for example, but you really are working one-to-one with a stockbroker, a particular person or individual themselves. So maybe it's a small company, maybe you got a team of people, but usually it's a one-to-one relationship. And the key part of that is you got to really trust that person. I mean, you're really betting on them to make the right choices for you. And you're paying a little bit more for that in comparison to other types of services. So you want to really trust that stockbroker and that they really have your best interests at heart. And that's been a real problem in the industry, where a lot of times stockbrokers are not necessarily looking at what's in your best interest. They might be looking more so on what's their best interest. We'll talk about that in a second here. Next is cost. Whenever you're evaluating any of these different options as far as actually the mechanics of buying and selling stocks, well, there's always a cost involved with that. When you buy stock, there's a cost. And when you sell stock, there's a cost. These are transaction costs or transaction fees of buying and selling. And then from there, you can have all sorts of different types of other fees or costs associated with how you might have your account set up, or other types of more, interesting ways of buying and selling stock, or setting limit orders, or things we'll learn about here in a moment. But the idea is there's a cost associated with that. And full service brokers, like anything that's like anything that is full service, costs more, right? You go to a bank, or you go to a grocery store, and it's more of a full service where they put your groceries in the bag and take it out to your vehicle and give you a lot of personal service. Well, that's more full service than if you go to a discount warehouse place where you kind of do it all yourself. And you should expect to pay more at the full service place. With brokerage houses and full service stockbrokers, the same concept applies. You are paying more for that extra service. You're paying more for that research. You're paying more for that expertise. And you just got to say to yourself, is it worth it for that extra value that they're promoting? So really look at costs, like at anything you look at, but particularly with full service brokers, really understand the cost structure behind that and see if you're comfortable with that. One thing that's really been common in the full service brokerage industry, and it's been a bad thing actually, and has gotten better, but still something to be really aware of, and it's still a bad thing. That's called churning, and beware of churning. So what I mean by churning is you pay a cost when you buy or sell stocks, right? Well, that's money that goes into the brokerage house. That's how they make their money, is by buying and selling your stocks. So they have an incentive to buy and sell lots of your stocks and keep turning over your portfolio over and over and over again. In fact, the more that they can turn over your portfolio, the more fees that they collect. Remember, they get paid when they buy or sell a stock on your behalf. So that's called churning, when they're basically just buying and selling stocks with the primary purpose of enriching themselves, not necessarily in your best interest, which is illegal. Now, with that, companies will say, oh, we're not churning, we're not buying and selling stocks, but there's been a lot of problems around it. So if you have a relationship with a stockbroker and they're doing lots of buying and selling of stocks, more so than maybe you're comfortable with, ask them, why am I selling this stock? Why am I buying this new stock? Why can't I hold on to this stock? What's going on here? And they might tell you some good reasons, but if you see a lot of it where it's turning over and over a lot, and you're really incurring a lot of fees, and you start becoming uncomfortable with that, that might be the time to really look for another full-service broker if you want to stay with full-service brokers, or look at these other options where it's more do-it-yourself that we're going to talk about. So beware of churning, just the rapid buying and selling or the frequent buying and selling of stock with the idea of enriching the full service broker. Now, full service brokers out there, who are some examples of them? Well, many household names that you might have heard of, like Merrill Lynch, been around forever, biggest brokerage house out there. So Merrill Lynch, Edward Jones, UBS, Raymond James, Wells Fargo Advisors, Morgan Stanley, Smith Barney. I mean, these big banks, these big institutions, these big brokerage houses have been around for hundreds of years, providing services to clients and providing full services to clients. So what's really happened in the more recent time is we went from a period where stocks were a complete mystery and people got involved in stocks, had to hire a broker, and they really relied on their broker, and they talked about how good their broker was. Nowadays, it's more about them educating themselves, doing a lot more on their own, do-it-yourself investing, and really having some investment products that help them to be more, let's say, diversified, like with mutual funds or exchange-traded funds, and some lower-cost options than the full-service brokers. So the starting point is full-service brokers, top of the heap in terms of cost, in terms of advice too around stock trading and buying. But right now, there's a lot of other options that you might want to take a look at. So let's take a look at those.